Let's shift the spotlight now on the banking sector because it's really banks that have been leading this leg of the market's up move. So is there more steam left going by the earnings that we've seen? We have Nitin Aggarwal joining in from Motilal Oswal. Nitin, season's greetings to you. Hope you had a great Diwali. Thanks for joining in this morning. So let's start with the big blue chip boys, HDFC Bank and ICICI Bank. I don't think there was any complaint in the numbers. But how much of it is already captured in the price? And, what's your stance on these two?
Yeah, hi. Thank you for having me and wish you and our viewers a very happy Diwali. And so both the large banks reported fantastic numbers. If you look at ICICI reported an adjusted expansion in margins, and HDFC Bank also reported a slightly lower dip versus what we were expecting. And given how the loan growth is likely to look up in the coming quarters, and already we have seen a good traction in the second quarter, we remain optimistic on the earnings outlook for both the banks. Though after such a good results, we have not seen as much of an up move. Rather, the performance was relatively modest on the trading day. But I think that this is a very short term to look at it. We remain positive on both the names, and we think that they should ideally deliver somewhere in the high teens over the coming year.
Okay.
Nitin, so far we've got a bulk of the numbers out. I think just awaiting State Bank of India and some others. What's been the aggregate earnings picture from the banking stocks this time? Have you done the analysis? And how would it compare with the expectations that you had at the start of the quarter?
Yeah. So, see, this quarter is likely to be the bottom in terms of the earning growth. We were already at flat numbers in terms of the YOY growth in first quarter. And this quarter, we expected this growth to decline to negative 7%. And but given how the numbers have trended so far, we believe there is a fair chance that this deceleration will moderate. And while we may still be in the negative, but it will be lower than 7%, what we projected. But the outlook on earnings is certainly looking a lot more stronger with the kind of resilience that you have seen in margins across the board. So several banks have reported margin expansion, and the decline for almost everybody so far is lower than what we have estimated going into the quarter.
Okay, all right. Hi, Nitin. Good morning. Good to see you in, and festive greetings to you, your team, your family as well. Besides earnings, the other big talking point is about these big deals. Suddenly, the interest for Indian banking names has gone up tremendously. The smaller banking names. We saw Yes Bank, there was a deal out there. Of late, we have that RBL banking deal did get announced. And, people putting in $3 billion plus into the bank, telling you the kind of interest out there. How much of the good news has played out for RBL Bank? What's the rating you'll have?
So we have further increased our target on RBL Bank. We upgraded the stock 3 quarters back, and looking at the outlook as to post the deal and the new opportunities that will unfold, we may have maintained a positive stance and raised the target to 360 on the stock. We believe as to the execution and the opportunities that will unfold and how will the bank is able to capitalize on those opportunities will all be critical. But looking at just the size of the deal, the association with the GCC and the involved countries, and the kind of opportunity, because you will benefit on both the asset side, the fee income, the liability traction, the NRI deposits, export financing. So many opportunities are there, and it will all depend on as to how the things unfold from here. But the progressive step that the RBI has taken has certainly brought in a lot of interest and attention to these mid-sized banks, which have been trading so much cheaper when you compare to the large banks.
Nitin, so among all the banks that you cover and the ones that you have a buy call on, which ones have the maximum upside? I mean, in terms of your target price, I'm just trying to understand from an investor's perspective, where do you see maximum risk reward from here? And also throw in a word on IndusInd Bank. Now, it's still dealing with its issues. There's still a cleanup going on, write-offs so high this quarter. But I mean, for those who are willing to take higher risk, could this be an interesting bet as well?
Yeah. I think, the targets will keep on getting revised up as to how the earnings outlook unfolds. As of now, we look like that FY27 will be still a much better year, while FY26 we have started seeing a recovery. But FY27 is when we are looking at a double-digit earning growth for the sector. This year, at the preview time, we forecasted flattish earning for the year. Now this may be like a mid-single-digit kind number in terms of earning growth for the year. So next year certainly will still be in the double digit. If all goes well, if there is not much of a rate cut impact, then this earning growth can move towards mid-teens also. That's very likely. And which is where you will continue to see the targets getting revised up. We will roll over the targets to FY28, and which is where the more and more upsides will open up. From the preference point of view, we have been positive on HDFC and ICICI amongst the large private banks, and AU, Federal are some of the mid-sized names that we have marketed in the recent quarters. And on Anderson, to your question, I think we are still watching out as to how the execution will go. The management is still working out on the 3-year strategy, which is what they talked about on the results call. And therefore, how the ROA can quickly come back to 1% mark, which is one of the key milestones to look forward to. As of now, we are still maintaining a neutral on the stock, but certainly the downside on this name, just from the recovery standpoint and the valuation standpoint, looks limited as of now.
Nitin, just one final question from my end. What is the call that you are taking on gold financiers? Manappuram, Muthoot, both up 50% since the start of the year, and they've been big beneficiaries of the rise in gold prices. So from here on, at this juncture, what is the view on these stocks? I mean, do you track it?
So yes, we do track both the names, and while it's a very tricky bet at this price especially, and our official rating is neutral, but given the surge in the gold price, these stocks continue to, of course, do better than what we are looking at in terms of our growth and profitability projections. And I think given the continued uptick that we are seeing on the gold price, which is completely relentless and very sharp in terms of upswing, and I think both these stocks will continue to do better. Muthoot certainly has been doing much better in terms of growth and profitability, and which is where our bias is more towards Muthoot at this price.
But Muthoot is trading at more than 3 times right now. Nitin, you still would stick to Muthoot rather than the other 2 plays that you potentially look at when you look at gold companies. Is a Manappuram that's at around 1.7 times, or even an IIFL Finance that has some part of gold exposure. So among the 3, you'll still stick to Muthoot itself?
I will say, Nigel, that while we are neutral on both the stocks in terms of our official rating, yes. But given the uptick in gold prices, these stocks will continue to do well versus what we are kind of writing right now, because this is very unpredictable and the uptick is very sharp to really fathom, and which is where we are also evaluating. But I think the continued thrust will keep these both the stocks doing better, and Muthoot certainly has done better in the last 1 year if you look at.
Okay. All right. Great conversation. Thanks very much, Nitin, for giving us your thoughts on how you're looking at the banking space and some of the top ideas there as well. Thank you for joining in. Have a good day.